Hello and welcome to another episode of Casual Friday. It's the last episode of the year. We're going to do a bit of the year in review stuff and maybe some predictions for next year. That kind of stuff always ages terribly, and it doesn't help when your trading system can pivot based on one candlestick on some made-up time frame. But we'll engage in that sort of discourse. For the time being, though, we'll say this at the end as well. But thank you for supporting Technical Roundup. Hope it's been helpful. Leave us a comment on stuff you enjoyed, stuff you didn't enjoy. And we're lucky and grateful to have you, Don. Speaking of grateful to have you, thanks for showing up. You've been, I put myself into a bit of a predicament because I watched your last stream and I said I'll do a drinking challenge. Every time Don mentions his girlfriend, I'll take a shot, and so I'm doing this from hospital because I've got liver poisoning.
No, did I mention it that much?
Just a little bit, but it's fine. It's nice and wholesome. It's sort of moving in together, pregnancy type of stuff. You're not on some Sigma grind set just talking about random girls at the club every weekend. That was for WhatsApp, so I'm glad we're past those days at least.
Yes, I'm glad.
How have you been? What's up? What's new?
I mean, recovering a little bit from illness because Christmas was wild. I mean, I spent it with my girlfriend and her family. It was like 30 people or 40 people. So like she got really sick. I got a little bit sick, but not that much. But yeah, basically recovering from all of that, going into like a hopefully very quiet New Year's because this year's been more than plenty for me. So yeah, doing all right.
Good.
How about you?
Yeah, fine. Anyway,
every time.
We have some timeframes to look at. We've got a day until the monthly close, obviously, and then we have a new year coming up. All these New Year points always have hilarious narratives surrounding them, which are never quantified and almost always made up or unfalsifiable to some extent. You remember from the bear market of past, it was, Wall Street bonuses and whatever, Santa's presents and fund redemptions and January inflows and all this type of stuff, which ends up being quite noisy. So if we look on the monthly time frame first, I mean, I made a short video about this on Twitter a couple of days ago or yesterday, whatever. Not much has changed on this time frame, right?
No.
I think the levels which make sense or that actually exist on this are the monthly 14K, and then the point of breakdown at let's call it 20K roughly. And then the next monthly level is actually at like 30K, right? The previous range breakdown, maybe even 30, 35K, whatever. At the moment, we basically had a huge summer puke where 3AC blew up and a bunch of people blew up more silently. We went sideways for like 4 months, and then we broke down from that consolidation. So that's like classic. You talked about this in your stream, which again I watch. Flex, but this is like sort of bear market. Well, it's like trend continuation price action, right?
Yeah.
We have like an impulse, a consolidation, and then the consolidation resolves in the direction of the original impulse. And so your options, or at least what makes sense to me from a high time frame monthly swing strategy, is you either want to be a buyer on some sort of failed breakout. A breakdown, the evidence of which would be the market trading above or being accepted back above 20K. So basically this breakdown being the bottom in one form or another, or it's the market looks so bad and trades so deeply into this monthly, weekly support, you kind of have to buy it because then it's sort of existential panic longs for the industry as a whole. And at the moment, it's not strong enough to reclaim 20K and hasn't reached those monthly levels either. And thing is, I'm not comfortable, generally speaking, fading the monthly time frame or trading too actively outside of it because it's been really good, man.
Yeah.
Like as far as timeframes go, obviously if they're too high, then the signals are too slow, or you don't get enough candle structure. Sometimes timeframes just fall out of favor and the levels get front run and they're not very good. But I just feel like for this entire year, if not longer, I mean, you can go all the way back to 2017, 2018. I mean, the monthly timeframe has been really good, man. So I'm going to need really strong evidence to step in against it. And I know there's like a weekly case that you talked about on stream and other stuff. But do you agree, generally speaking, that if you want to do business with the high time frame wind fully at your back, it's either above 20 or lower down?
Yeah, I do agree. I mean, it's the one sensible thing to do, I think. Like, I think if you do anything else, it's out of either boredom or greed, which
Which one are you?
both.
Nice.
But yes, it's very, very clear to me that above 20K, I think we're going to see some big momentum to the upside. Just makes sense structurally wise, and as well as like just looking at how everyone's dug into their bias so much that 20K would shift a lot. And the same is true if it goes down. I think like you have to take like if it goes to 14K, if it closed 14K, for example, if it wicks to 10K, like you have to buy the wick to 10K. You just have to if you want to be in crypto, right? Because you don't get this discounted like almost ever. It's very rare. We've had a few instances over the last few years, but it's a luxury, right? When you can buy so deep down on like a big move, especially given how deep we are in this bear market already. So I do agree. Like if you get to buy low, especially just based on the monthly, you want to do it. If you want to be like a little bit more conservative, 20K reclaim makes a lot of sense. Everything else is, like I said, just wanting to kind of get a little bit more out of it, which is greedy by definition, I think.
Yeah, I think that's fair. I will note that, and this is going to sound strange, and it's sort of contingent on personal trading style, but I feel like buying a nuke, at least for me, is going to be much easier than buying some sort of 20K strength or reclaim.
Well,
I
yes, I
mean, that's
agree.
always been how I have operated it. You know, I love the market breaking, exchanges going down, panic, large outsized candle buy, even if it's not on the candle itself, like in the next day or two, you know, when that liquidation wick gets backfilled or whatever else. I always thrive in those environments. But buying strength for me, as I've said many times on this channel and others, that, I mean, it's tricky. And it's something I've worked on towards, I mean, a bit late towards the end of the last bull market. But generally speaking, like there's something about my ape brain where it sees that type of outsized move. I instinctively want to fade it. And so at least
Hmm.
I've managed to get away from that habit, but actually becoming a buyer on like a 10-20% move up, which a lot of the time ends up in the middle of nowhere. I mean, that's tricky for me. And the thing is, when that argument of a 20K reclaim is presented, it's always theorized as some sort of, oh, look, it'll close just above the level, and then it'll give you a really nice technical pullback and a higher low. But realistically, the chances of that are quite low, I feel, right? If we're going to
Yeah.
get that type of failed breakout momentum reversal, it'll be just some turbo Chad candle that goes to like 22, 24, something ridiculous. And then you just have to do business at that displaced price, as opposed to some sort of nice and orderly, oh look, we're above 20K and now it's acting as support, and you can go to sleep and wake up, the market will still be there. It's very unlikely to be one of those.
Yeah.
But I feel like if you don't have a plan to get involved one way or another, you're going to be in trouble. Because that's the thing for a lot of the perma bear type of approaches to the market, like nothing is ever good enough, right? Like if it goes down to support, it can always go lower or wick lower. If it goes up, it's a bearish retest. If it goes up through the bearish retest, it's a deviation. It's like, okay, at what point can I actually buy this thing if everything's a fucking trap or if everything's going lower? So I feel like you got to have a model in your head for how uncomfortable am I going to be if I'm trying to trade this extremity. And the answer is, because it's an extremity, the answer is very. So I
Yes.
guess being mentally prepared is good, but also experience. You can't beat that as
Yeah.
far as getting ready.
The thing is, like, if we do reclaim 20K, right? You're gonna, like you said, we're gonna end up at 22, 23, 24. Off of that move alone. Like if it's actually a bullish move, you're just gonna squeeze a lot, and then you're gonna end up in an area of resistance, right? And then it's gonna really suck if you're not in position. And this is like basically what you've been talking about, because you have to buy into resistance if you want to buy. You know that you should be buying, but it's a resistance. You don't want to buy into resistance, and then it consolidates for a day, 2, 3, 4, and then it makes another move to the upside, right? And you obviously don't want to be buying into resistance, so you step aside. And you're like, oh, maybe it'll pull back to support, but if it's actually bullish, it will not. And then like that's why this is so hard, and that's why support buying to me it's the same kind of story. Support buying is so much easier to me, just based on the fact that I'd rather buy support than buy resistance, even though I think in these kind of instances, especially if it's kind of like telegraphed like this, as in like, okay, you broke 20K, that's the most significant level on the whole chart. It's very telegraphed that it's probably going to go up afterwards, right? But it's still going to suck buying into that 22, 24K resistance. And it's really going to be very, very difficult. And that's like why I totally agree with you. It's tough. Some people do it really well. I do it from time to time, but I wouldn't say I'm an expert at it, because it always makes me feel dirty when I'm buying like something that's already up like 20, 30%. I'd rather buy something that people don't want to have when it's down 50%. So,
Yeah.
yeah.
I find that what's trapped me in the past, and maybe this will resonate with some of the audience, is when I see that type of outsized move through a high time frame level, naturally I'll go to the low time frames. but that makes the issue worse because it makes the move look even bigger, right?
Yes.
And I think that's what you shouldn't do. If your trigger is a high time frame reclaim or like a strong momentum move through a high time frame level, and you're looking to buy strength, don't jump down on the lower time frames to facilitate that idea, because a lot of the time it'll just shake you out. Because these moves will, by definition, a lot of the time be short squeezes as well. So you'll have like huge single candles on low time frames, and every trader instinct you have will tell you not to buy it. And I just feel like going on lower time frames, as I've done in the past, like a daily breakout, I'm on the 5 minutes saying, oh, is it going to bar? Is it going to bar? It's a really stupid thing to do and actually compounds the issue. Like at a certain point, if you're looking to buy strength and the strength is really strong, you just have to bite the bullet. It's almost like a weird logical trick you have to perform where you want to see strength at that level, but that strength is so strong you suddenly don't want to buy it because it looks like it went up so much. So it gets into all sorts of mental gymnastics. But I feel like, if you want to buy strength, you shouldn't be put off by strength. And by definition, that will mean price being displaced from the level that should have been resistance. I think the 6K reclaim is a pretty decent example of this, because look at where, looking at it on the weekly time frame, look at where that week closed. The wick was at 7.5K and the close was at 7K. So if you take the 6K level, that's like a 12 to 20% displacement on the weekly time frame, which seems like a huge move that's going to retrace a little bit. And it did no such thing, right? It like went up for weeks. You had one sideways little consolidation at 8K, and then you blink, and it's basically doubled off the back of that breakout from like 6 to 12, 14, whatever, more than that, which is crazy. So I feel like that might be a valuable lesson. We've gone a bit of a tangent there. But if you're going to be buying strength, don't be put off when there is actual strength, and don't FUD yourself by looking at lower time frames, because that's not where the signal you were looking for in the first place is going to take place. If you get 22, if you get 24, whatever, it'll be uncomfortable in the short term. But if your signal is right, it shouldn't matter. Because if the argument that 20K reclaim is so bullish, it shouldn't be stopping or turning around, or the top wouldn't be at 22, 24, whatever, right?
Yeah. The funny thing is, the only way your thesis of a 20K reclaim is bullish is actually gonna be right is if it's this kind of island, right?
Yes.
So the violence is actually, in fact, showing you that your idea was right. But you're still going to be sitting there like, oh, what the fuck? I don't want to buy it. Like, I could have bought this at 18K just like a day ago. No, it's at 24.
The recency bias is so strong, man.
It's horrendous. And I mean, in a market that moves this much, and this is something I'm saying while we're moving like $2 up and down every day. But in a market that can move this much, it's important to kind of keep your wits about you, especially when it's like this boring. Because when it's this boring, you kind of learn how to like fade everything. You're like, okay, we had like the daily move up. Now we're gonna go down, and you're gonna be right like 9 out of 10 times. Problem is when the moves are this small, you barely make anything because you still have to pay fees, you still have to do a bunch of shit to actually make the trade worthwhile. And then the one time you're wrong, you're gonna be getting slipped by a shitload, right?
All your profits, if not more, right?
Yeah, and that's why, like, yes, there's some that you can trade this, but you have to have a timer for yourself. Basically, be like, okay, at some point, I actually don't want to risk it anymore, right? And that's completely can be like, okay, this support level, this resistance level has been hit 5 times. We've full retraced like 5 or 6 times a move. Now I'm like, okay, I'm over it. Can also be like 10, can be 15, whatever. It depends, right? For me personally, like if I was trading this low time frame, I would definitely not want to anymore. Because I mean, this range is just very old. And especially given, and this is honestly something that I don't see discussed often enough, especially given that we've been mirroring the S&P so much, right? Like I see a lot of people kind of claim like they have some sort of edge in the market based off of their technical trading in crypto. But honestly, like if it's correlated almost 1-to-1, you're basically making the argument that you can trade the S&P technically.
Intraday,
Intraday, which, yes, like high time frame wise, has actually been working pretty well. Support resistance levels been working wonders on the monthly on the S&P. But I would argue that like you don't really have that much edge, I think, trading the S&P on the hourly or on the 5 minutes or on the 4 hour. I don't think there's many people, if any, that have a lot of edge there. So when it's trading 1-to-1 correlated, the only kind of business that you can make in crypto is at high time frame levels, right? Because there you're gonna see like a little bit of support going your way. Let's say the same thing that we had at 20K, right? Where 20K people were buying it no matter whether the S&P was going down or up. So you kind of have like a little bit of a tailwind. Obviously broke at some point, and then turned into pretty strong resistance. And the opposite is true, right? So you can kind of like do some business off of TA when we're like correlated, but it has to come from really, really good levels. And those you will only find on the weekly, on the monthly, or even higher up. I think there's not that much edge in the lower time frames to be had, at least if you're just trading technicals. If you have some other system, sure, like I'm down for it. I claim that I don't think there's still too much to do, given it's like you would have to have a system for the S&P, tailored for the S&P, which I don't think many people in crypto have. So
yeah, by definition. And also the correlation consistency has decreased in general. So we've had, while the larger correlation is still intact, it feels like the windows of short-term decoupling have been increasing, but also
yes.
then those increases haven't been directional. So we've had pockets of crypto relative strength. We've also had pockets of crypto relative weakness, and there's no real pattern, in my understanding, to those recent developments. Like even if you look at the hourly Bitcoin versus the hourly S&P at the moment, right, going from basically the 28th in the last couple of days, S&P just went up only into the range high from 3780s to 3860s. Bitcoin just kind of went down sideways, didn't do much, right? We've also had it the other way around, where the S&P is down more than Bitcoin, and I mean, I don't know. That thesis to me just seems so tired at that point. I'm comfortable supporting at the moment the idea of larger macro correlation as far as direction goes on higher time frames and trends and all that type of stuff. But in terms of just like intraday tick for tick trading, I think that's on its way out.
Yeah. It seems to be getting weaker, which is really good for us, right? This is what we want to see, because the moment we actually trade in like the individual thing again, as in like Bitcoin, without having to trade the S&P, a lot of edge comes back into the market, because then you can be like, okay, I can use the tools that I've been kind of honing for the last few years to find like opportunities to take advantage of, without having to have total understanding where the S&P is going to go or where the traditional market is going to go. And that's much harder when you have that kind of like, okay, I have to not only analyze whether crypto has like some systemic risk still, and then add on top that you have to be completely right on the S&P, and then add on top that like there's too much,
It's
right?
just so harsh, right? It's like, oh, you want to trade crypto? You better have a directional edge trading one of the most liquid markets in the world, kiddo. It's like, wait, I didn't sign up for this.
Yes, and it's like it's kind of funny, right? Because like at least, and this is something that I will credit the entire crypto space with, is that like a lot of crypto has kind of been like adapting to it and
Yes.
has been like getting informed and learning what all of it means. Obviously, we had like a bunch of people that pretend they're experts after like reading 2 or 3 sentences about how the traditional markets work. But in general, like most people are really curious, which is a really good thing. But I still think we need to have this market decorrelated again before we can have a major edge in anything. And that's coming from coming from me and coming from you, where we've traded this year quite decently, I would say. So
Or not, which ended up being decent.
exactly. I mean, not trading at all is like one
Yeah.
of the best things you could have done this year.
I think
And
it's correct to say I've had 0 swing trade setups this year, which is just like, okay, so you're just a YouTuber now, I mean, I've poked and prodded. I think I counted up. It was like fewer than 30 intraday trades this year, and 0 swing trades, which is just a bit mental. But it's fine. I'll take that. But I completely agree with you. And as much as we like to meme about, oh, this month we're central bank experts, and then we're war experts and geopolitics and pandemic, like it's actually a good thing that there's that intellectual curiosity and people are willing to learn and acknowledge that crypto flows vary in terms of what's pushing it around and where it comes from and the macro influence. All of that is good. Although I will say that with the caveat that I'm still a believer in macro bear market PTSD thesis, that at some point it'll just matter a lot less than it has this year, and people who are still stuck on their Bloomberg terminal, PCE, CPI, NFP, all of that type of stuff are going to have a rough time when it's just kind of doing crypto things. So I
Yes.
think if you're getting started and trying to figure out macro like now, I think the most impactful year has maybe gone. Next year, it's probably still going to matter, but less. And then at a certain point, if you come into crypto and it's like, oh, what's your edge? Do you know like meme coins, or do you understand projects or technicals? And you say, no, I'm a macro expert. That's not going to be the most useful edge in the world. Christ, we veered off topic. Should we let's wrap up as far as technical stuff goes, because not much has happened. So maybe it's a good thing that we kind of veered. On the weekly time frame, last we spoke, it was that big red wick that we had, which just looked like a retest of the previous month's low in the underside of the sort of
Yeah.
summer's deepest wick. And not much has happened since then. You know, we had a small green candle, which didn't really do much, and now this current weekly is just, it's just kind of sideways floating at best. But the prevailing sort of narrative still seems to be breakdown, some sort of spike retest, and we're still range bound. You weren't too hateful. You weren't a hater of the weekly time frame like I was on that specific point, and price has barely moved since then. But have the last two candles or like 1.5 candles changed your views strongly? Is the weekly time frame kind of giving you pause at the moment?
I mean, it looks not nice. I'll say that much. But I mean, I said when that candle was happening, right, that it didn't seem like the most important thing to me, and turned out like nothing really happened. But obviously not the greatest chart, right? Given we hit a support level, which is 16K, 16.2. We bounced a little bit, and then I mean, the bounce is barely visible on the chart, and now we've retraced like almost all of it. That's not a good look. I'm not really sold on it being like, oh, this has to be a bottom, whatever. I still think there's a possibility, but I think the longer this takes, the more nervous I'm gonna get. Which means the last 2 weeks I've just been like, well, I don't like this too much. Not the biggest fan. I'm giving it some room because I mean I bought some around 16K, which I mean has not moved at all. Like it's literally like I mean, 200, 300, $400 moves. Is nothing when you when you just look to the left and you get like $1,000 candles left and right. I mean, it seems like a lot given we've had one or two $2 candles in the last few days, but this is nothing. But yeah, I'm giving it some more room. I'm not sold, is what I'm gonna say. Like this doesn't look great. It doesn't look particularly bearish to me, but it doesn't look great. And when you have a downtrend and everything is pointing to that bearish direction, a chart that doesn't look great isn't necessarily too appealing. It's just one more thing, right? You want to have at least something in your corner. Right now, we don't really have that much.
You're not sold, but you haven't sold. I like that.
Yes,
Makes sense.
not yet.
The daily time frame is really the only time frame within this consolidation that has offered meaningful candle structure. Last time we discussed basically the failed breakout at the range high at 17.5, and now we're sort of trading around and closing back below the midpoint of the range. Any developments on the daily time frame that pique your interest? I mean, for me, I made the argument that a mid-range reclaim wouldn't do shit, or at least wouldn't be compelling enough for me to take a position, because A, it's the mid-range, and also it would have to happen like during the Christmas period, and I just wasn't expecting any fireworks at that point, at least not ones in the charts. And it looks like that sort of transpired, but we had like 4 daily closes above the midpoint at 16.7, and now we're, as soon as the holiday season ended, I mean, that didn't really lead to much, which leads us, I mean, if we take this range on any other time frame, any other asset, you had a failed breakout at the range high, you're generally expecting the range low, right? Especially when the midpoint doesn't provide shit and the reclaim just isn't doing anything. Have you changed your stance on not being a sort of fresh first-time buyer at the range low? Should the market get there?
No, I still like if we go back to 16K, like low 16Ks. I'm not entirely sure if I'm gonna sell, but I'm not want to buy more. I'd rather if you go back to 16K, I want to have some ammo left.
Yeah.
If I can buy like 14K. But yeah, I do agree. Like this is just kind of like it's a sad daily chart, right? It's a range, like it completes, like it's a nice range, but it's so constricted that the moves, like even if you're like, okay, I caught a range high and I'm taking it to range low, I mean, that's a move of like what, 1,000, a little bit more than
Yeah,
that.
it's like 10% from extreme to extreme, basically.
Yeah, which I mean, 10%, just nothing to sneeze at, but it's still, I mean, it's not what we used to, right?
Yeah.
Especially given, and I mean, like it might sound odd saying, hey, 10% is nothing, but especially given that we moved from almost 70K all the way down to 15,
Yeah.
you'd expect like to be able to trade a little bit more meaningful bounces. So far, nothing really. And when you're not getting the meaningful bounces, even if you're bearish, right, it kind of sucks because you don't have any good entries to kind of short into. So yeah, right now it's just okay. Take 2, 3, 4, 5, 6, 7% if you can get them. Good chance you won't. It's kind of frustrating for a trader anyway.
Yeah.
Like if you're an investor, I mean, I like buying 16K or buying 14K in the long run probably won't make too much of a difference.
Sure.
If you think it's gonna go up. If you think it's gonna go down, probably not either, because if you think it's gonna go down after hitting 14K, you're expecting zero basically, right?
Sure.
Or like close enough, so it doesn't really matter either. So as an investor, I think like there's not really that much to do. As a trader, sadly enough, not really that much to do either.
Yeah.
Like,
That's what we have at the moment. And you're right. It feels like, especially from an investment point of view, it seems like almost under 20K to some extent, all prices start to blend together. I mean, definitely under 15K or thereabouts.
yes.
It's like 15, 12, 10, 8 for a wick. Like, who cares? It's the same shit, you know? The same sort of bear market apocalypse, industry's gone to zero, panic longs and hope that new entrants believe in something and then come buy our bags from us.
Honestly, like the way I look at it is basically like how many times will you multiply your money if it goes back to all-time high,
Sure.
right? And I mean, like, and this is one of the reasons why I've been so cautious, like, for example, at 30K, because I'm like, okay, if this is like bullish, where does it go? And I didn't expect like anything necessarily above all-time high, just given the macro situation. So I'm like, okay, if I buy 30K, it can go to 60K, but it can also go to 15, right? Do you remember like when we were talking about 14K support back then?
Yes.
And then you're like, okay, well, it can go down 50% or it can double. And I'm not entirely sure that going like the doubling is more likely than the halving. And then you just don't take necessarily the trade, or you get out of the trade early. And now that we're at 15 or like 16K, it's a little bit of a different calculation, right? Because a lot of, at least, I mean, for me, I think we're going to go back to all-time high. People are expecting like, okay, we go to all-time high and then we go to 500K. I think that's bullshit. But I could see it go back to all-time high in the next couple of years at some point, right? And then you're like, okay, if I buy 15K, I can make like a 4x happen right there, which is quite nice, right? At that point, you start being like, at least me, my brain starts being like, okay, this is actually more interesting now. If it goes to 10, obviously quite a bit more. But then you start going into the greedy territory, right? Because you can also say, okay, if it goes to 1K and it comes back to all-time high, I'm going to be rich, but that's just not how markets work, right?
Yeah, I
It
did
goes
that with
to
Luna. You know, I was like, it's 1 cent or a fraction. It's like a litoshi if it goes back to all time high. Yeah, at a certain point, like your base premise needs to be likely or at least probable, right? Like, you know,
yeah.
I'm sure people buying altcoins from generations past were making a similar type of calculation, which is why that's, I think, the main issue people run into.
Oh,
They'll look at
yes.
altcoins which are very unlikely to come back, let alone make new all-time highs, and they'll apply that logic as, you know, transplant that logic from Bitcoin to whatever late cycle shitcoin that doesn't even exist anymore. That's
Oh,
sort of where the
yes.
danger is. But also to your 4x point, I could do that, or I could also wait for the trendy altcoin of the next bull market, hold it for 2 weeks and make a 4x, or you've been holding for 2 years to make that same 4x. So
Yeah,
I mean,
but
I say that cynically, but it's always the kind of where you land on the risk curve and the opportunity cost and the theta decay, you know, the time component. All of those are sort of very, very dynamic.
but the funny thing is like it's really easy to say, hey, I'm just gonna wait for the altcoins, and I think it's like a valid strategy, right? Like, hey, I'm gonna wait for Bitcoin to go to 60K, and I'm just gonna buy an altcoin, get rich. But you realistically only have like 1, 2, 3, maybe 4 weeks to do that, and you have to time it well. And it's not as easy as it sounds,
No,
right?
of course,
Because
yeah.
it's always like in hindsight, and this is the funniest thing, right? Like you look at any bottom in Bitcoin's history, like, holy shit, this is so obvious, right? You look
Yeah.
at like 3K, you look on the monthly, you're like, oh, this rounded out. And then it just went up, like up only, like it's so obvious. And then you have like the COVID crash, like, holy shit, like why did no one like why were people panicking? But it's a completely different story when you're living through it, which we are right now, right? I think a lot of people don't even think that we're kind of gonna come back to all-time high, or they start losing sight of that at all. They're just like, okay, we're gonna go to 14K, then we're gonna go to 20K, then we're gonna go to 10, and then like they map this out like 15 years into the future, and then maybe we go back to all-time high. And that's just kind of what happens, right? When you're stuck in these bear markets, right? You kind of get lost in the smaller stuff, and you lose sight of the bigger picture that you usually have, which is not necessarily the worst thing in the world if this thing goes zero, because then you just trade level to level. And like that's the great thing about being a trader, right? You can still make money on this thing. Like this goes to 14K support, you buy it, you sell a little bit higher, you trade around, you make a bunch of money, and then there's that. But if you really want to like make it bigger in crypto or in general in any market, you have to have at least some conviction, right? And you have to kind of put your balls on the table at some point. It's just a question of where do you want to do it.
Yes.
A lot of people do it too early. A lot of people don't do it at all. There's like a whole subreddit, I think it's called Bitcoin or something,
Love it.
of people basically being like, haha, Bitcoin losers are like getting trashed. And they've been doing this since Bitcoin was trading at $10, right?
Yeah, true.
And now it's trading at 16.5. It's down a shitload. And it's still like, if any of them bought like just like $100 worth back then, they'd be rolling cash even if they were selling right now. So it's always like you have to find a good balance, and it's not as easy as it looks. It's just one warning that I want to give to everyone. It's basically like where price is gonna go is gonna look obvious in hindsight, and it's always looked obvious in hindsight. But when you're stuck in it, it's really tough. So don't lose sight of what you actually believe in. If you're just here to trade it, it's one thing. I actually that's my main thing, really. Like I'm here to trade this thing to make money. But I've seen too many people that have faith in like crypto, whatever, just kind of lose sight of what they actually believe in, which I think is a shitty way to go about it.
Yeah, I mean, you become cynical almost in tandem with the cycle to some extent because it's so easy,
Yeah.
and that's the feedback loop you're getting. You know, in the bear market, the news only gets worse, and prices get worse, and they sort of feed each other. And the same in the bull market. I agree with your point about conviction. And as someone who trades level to level, it's very hard to hit massive cyclical home runs trading level to level. It's a fantastic framework for like a trader, but if you're trying to milk crypto bull market vol for what it's worth, it's actually not the best framework. And this is coming from someone who actually uses that framework. Because if stuff is going to go 2, 5, 10, 20, 40, 100x, there's no way that's just from support to resistance, right? Or from resistance to the next level of resistance. At a certain point, you almost have to ignore levels by definition to put on big swings. And if your framework doesn't allow you to do that, then you're sort of limited in how much upside you can capture. The natural rebuttal to that, which I've seen presented, is that, oh, well, you know, if you trade level to level and then you simply close at the level and it keeps going, you can then re-enter and rebuy. But I don't know if these people actually trade a lot of these trends when they're happening. That rebuy portion, when it actually goes parabolic and makes the most money, it's almost impossible to rebuy using any type of level, structure, trade, or whatever else. I mean, maybe you have some sort of daily open strategy or something intraday that allows you to buy essentially in the middle of nowhere. But if your framework, and this is coming from an active practitioner, if your framework is high time frame oriented level to level, it's very hard to catch and hold a lot of these large cyclical rotations. And you know, that has its pros and cons, but at least be aware of the limitations of your own system. If you're trying to play those huge rotations on a cyclical basis and you approach it as like a mercenary trader, you're very likely going to leave a lot on the table. And not that then this whole idea of, oh, well, then you close and you rebuy and you reopen and constantly rebalance. In most cases, in my experience, the trend just locks you out, and that's just a fantasy which you tweet about to feel less bad for selling early.
Yep.
Allegedly, not that I've ever done that.
I mean, I can give an example of where I've done it. Basically,
Sure.
you just go back to Dogecoin back in the around the 11th of July 2020. Like you have a little bit of a pump there, like just look at it daily or something. You can also look at it weekly, and then you turn off log chart, right? Because then it's a little bit more of like an experience, right? Do you see like the 8th or 9th of July 2020 pump?
Yes.
And then you just kind of like you go to the left, like you go to the right, and you sold the high of that pump because you're a genius trader, right? And you're like, okay, if it flips that level, I'm just gonna rebuy, which that level is basically 0.05. And then you scroll to the right and you see that never got close to it. And you're like, well, fuck, whatever. I'm just gonna like if it breaks out again at 0.1, I'm just gonna rebuy the flip of that level, right? And then it goes to 0.045, and you're like, what the fuck do I do now? And it keeps on doing this. And there's zero retests the entire way up. You bought this thing, and I mean, I did. The reason why I can talk about this like this is because I bought this and I sold this for like a 2 or 3x back in the day. And then you see what it did afterwards, right? It went up to 0.7, almost to $1 from below a cent, right? And I had a really good entry. I had an entry below a cent, and it went to $1. So it's like this whole level to level thing is great in bear markets. It's in general like it's a very nice way to trade, I think. But the big moves, you're not gonna get it like take advantage of, and then you're gonna hate yourself for doing it, like most people do anyway, because you're gonna be like, what the fuck? And then you're gonna go like, what the fuck? I've just missed 100x. I bought a coin and I sold it for 2x, and now everyone that bought it with me is just giga rich. And what the fuck is this shit? Right? And then what you're gonna do, and this is gonna be during the height of the bull market, you're gonna be like, fuck this level to level thing, because I mean, I've just been like kind of getting fucked, and everyone's been getting rich. Like I've just made like a 10x. And this is the funniest thing ever, right? When crypto people, and I mean, this is me including myself, they're like, I just made a 10x and this idiot made a 100x. This is not okay. And then you start complaining, right? And this is just how it goes. And then you move away from your level to level strategy that's been working, but it's just kind of like underperforming. And then the market goes to shit, right? And that's like the big danger, because the level to level thing, you're basically limiting your upside quite significantly, but you also limit your downside,
Yes.
right? And what the people that like kind of just brainless trade the Dogecoin pump basically do is they ignore the downside, then they get huge upside, and then they give it all back. So there's like the level to level people, they're gonna survive from cycle to cycle, but they're gonna be always, and I mean this is me included,
Oh,
we're
me as
always
well,
gonna,
big time, yeah.
you're gonna sit there being like, this is just kind of stupid. Like these complete and utter morons are outperforming me. And you kind of feel like an idiot. And but yeah, it's just how it goes. So like I'm not saying, hey, don't trade level to level, but sometimes there's a mixture that you can do. And sometimes you just gotta be content that the only thing that you can do is trading level to level, because the conviction that you actually need to hold through like a pump like that is actually quite high, right? You either have to be like 40 IQ, just be like, okay, whatever,
Yeah.
or you have to have like sky high conviction. It's gonna be really hard to sit through. Looks easy in hindsight, just like, oh, you just had to hold, but it's very much not, right? So
Yes.
like it's just a little bit of like experience and a little bit of kind of like I mean, mistakes that I've made, that everyone's made in the past, I think, talking there, but I think it's just worthwhile mentioning it.
Yeah, big time. I agree. I mean, as someone who, I mean, this is literally sort of how I trade, still level to level. And it's like a very conscious thing that I've worked on in terms of developing systems that let me hold beyond my target and also let me enter outside of clear high time frame structures. And those are things that I've worked on, refined. I think I'll be better now. But certainly the prevailing theme throughout my career, because it's been very heavy, sort of high time frame level to level oriented, is I'll make far less money than the average sort of 40 IQ punter in the bull market, but then
Yeah.
I'll keep like the overwhelming majority of it, whereas their kind of P&L volatility is completely insane in comparison. So as long as I can make tweaks to that, and I feel like you've always been pretty good, well, certainly better than me when it comes to that, because we'll talk about a chart and I'm like, oh, this is a big resistance, and then you're like, well, yeah, but if I'm right, then this whole thing gets smoked, you know. And that's a contextual analysis, which isn't, you know, at a certain point you have to make a choice. Like, am I gonna, you know, to what extent am I gonna adjust my level to level framework to allow me to be exposed exposed to more upside. It's one of those things like with any trading system or tool, you need to know the conditions in which you're applying it, right? Let's say in a
Yes.
downtrend, you might want to get extra strict on your level to level stuff because there's no free money lying around on the floor that's going to bail you out. Whereas in a super bull market, you have to be consciously aware that you might be able to cope by saying, "Oh, I'm being like a careful risk manager by trading level to level," but you always have to sort of factor that against what am I leaving on the table by not allowing myself to hold that type of exposure into what would be unreasonable levels, granted in unreasonable markets. Maybe it starts to make sense at that point. So I guess if you have, I mean, for the audience's sake, it's important to have like a trend trading toolkit and stuff that just allows you to hold for longer periods of time. And a lot of the time, in my experience, a level-to-level framework conflicts with that type of system. Because level-to-level framework just says, like, look, when it hits this level, you're out. It's done its job. And there's very rarely a time component to it. And it's certainly, it's very difficult to hold through your resistance levels or through your targets. But, when these things go up fucking 20x, 1000%, etc., you just need to give yourself away to put on that exposure one way or another. And as I've said, transparently and stuff, that's been a manifest weakness in my system up until like basically the end of the bull run. And I've sort of worked on it at the tail end in the last quarter, worked on it now. I think it's better. It's something I can talk about. A lot of it has got to do with trading intraday timeframes, even without high timeframe confluence, and also trading more contextual levels like daily opens, previous day's high, low, open, etc. So that's potentially somewhere the audience can look, and I can make some more content around that. But yeah, just kind of know the limitations of your system and how those limitations will sort of manifest should a shift in trend or a shift in conditions come into place. But enough roasting ourselves for selling early, Don.
Yes.
ETH. So the ETH monthly, also coming to a close. It's still above that 1.2 monthly highest close. I really feel like a lot of the market is kind of built on this type of structure, because I'm sort of blue in the face from talking about, ETH relative strength, Bitcoin is below its lows, and ETH is making a higher low, and ETH participated in the bear market counter trend rally with equities, whereas Bitcoin didn't. So it just feels like there's a lot of weight put on this level, but there isn't like a ton to show for it at the moment. It's just been consolidating. It's been stuck. On the weekly time frame, I don't know if you just maybe I'm wrong here, but if you go on the weekly time frame and just put on the line chart, that's sort of textbook bearish market structure, basically from the merge high, right? You've got high, low, lower high, lower low, lower high, lower low, what looks like a lower high, and it's like you just basically have market structure compression into this high time frame sort of 1.2k level. And if you look to the left, there's fuck all. Let's be real, right? Like if there's 1.2 cluster breaks and it catches up with Bitcoin and makes a lower low, first of all, in terms of sort of cyclical tendencies, you would expect that breakdown to outperform Bitcoin to the downside if it does what it has done in the past. And also just in terms of technical structure, there's just fuck all. And it's not just an absence of structure from a purely technical point of view, but you have to also add the factor that the market will have been consolidating at the same point for like 2 months, and then you have like a 2-month breakdown into an area where there's just a big gap in the volume profile, if you will, before the market gets to any sort of meaningful levels. So I mean, I'm not going to re-litigate the whole relative strength versus lag type of discussion, but this thing needs to do anything other than what it's doing at the moment, because it's definitely making me uncomfortable that it's just stuck at the one level which really matters, and there's no good evidence, I think, at the moment of breaking away from that. Because look, if we transplant the same range as we did for Bitcoin on ETH, it's the same story as we discussed last time. We have a failed breakdown at the range low, failed breakout at the range high, diddles in the middle at the midpoint doing nothing over Christmas, and that's sort of what you're left with. So what do you think of ETH? Maybe I'm just like a turbo doomer, and in hindsight, it was like, dude, Bitcoin broke down and ETH didn't for like months. You're such an idiot. It was obvious relative strength, and then it went to like 10k. But I don't know. I don't think there's a ton of evidence at the moment to make me think of a wild divergence between the two.
No, I mean, I do agree. It kind of has to move away from this level. Just whenever something leans this hard on the support, I'm just like, oh, I don't like this. But it's kind of funny because this is one that's going to be so fucking obvious in hindsight too,
Yes,
right?
yes.
Just talking about hindsight. Because like the thing is, you can make both arguments. You can make them like both arguments kind of hold some truth in it.
You can make them
You
so
can-
well. That's the issue, right? Like,
yeah, which basically like the thing is when you have those two good arguments, basically, okay, is it lag or is it relative strength? And both sound really, really good. You just don't want to trade it, right? You want to see one of these arguments basically fail, as in like let's say 1.2k fails. Like that's just a reasonable approach anyway. Like let's say 1.2k support fails and we go back to like 800, 700, whatever, those kind of levels, and you can be like, hey, okay, it was lag, the lag played out, now it's an interesting area. Or you can be like, hey, we're going to break 1.3k, let's say ETH goes up from here and 1.3k is the nearest resistance. And then it starts looking like it's breaking the trend because you can draw some shitty trend line in there. It's broke the first resistance, and then you can make a different argument, be like, hey, this actually looks like it is relative strength. Because right now it's relative strength by not breaking down. And what you want to have is relative strength by actually being green for once, right? And that's not been
it's so
not been the
relatively
case.
strong that it's not as red as the other stuff for weeks. You know, like...
I mean, that's like the thing, right? I mean, there is relative strength there, but it's like it's all red, and there's not that big of a difference when it's like, okay, it's red 10% or it's red 7. But that's kind of something that has to change. Honestly, and this is something that I always say before, like before support holds or support breaks. In this kind of instance, like I wouldn't want to short the support. It's support. It's been tested too much to make me kind of feel comfortable. Like I wouldn't want to all in my net worth into this. But I still wouldn't want to short it just because it's support and because it's at 1k, right? ETH traded at 5k. It had a bunch of bullish development this year, right? Let's be real. Like all of the stuff has been going really fucking well for ETH. The only reason I think why it's kind of like not doing well is basically because the entire crypto market isn't doing well.
Yeah.
So like forgetting all of that, and this is easy to do because we've been having shit week after shit week, but forgetting all of that I think is dangerous. And then shorting something that's already down, how much is it? It's down like 75%, which is actually quite tame in comparison to other stuff in the market. Like if you look at any other altcoin, that's quite tame. But like ignoring all of that, I think is dangerous because you still have one of the biggest narratives that we've had in crypto, basically ETH going deflationary, right? We still haven't had that play out at all. I think it's kind of on the back burner because the entire market is doing poorly. But I wouldn't want to fade all of that. I would much rather, if it crashes to 800, it crashes to 800 and I'll buy it. If it crashes to 700, I'll buy it. Or if it shows some strength through 1.3k, I'd be more than willing to kind of put on a bigger position as well. Because I think there's a lot in the corner for ETH. It's just that the entire market's just kind of been dragging it down.
Yeah, it's like a future cycle catalyst that's amazing, but hasn't had a chance to play out yet. We talked about that, the proof of stake transition, like the merge and the change to issuance and all that type of stuff. That's going to be an awesome flywheel effect when the market isn't a total piece of shit, but it just hasn't had a chance to manifest in that form. And we did talk about it. I think in terms of like week to week strength or bullish stuff, I don't think our views have changed or that they diverge on this matter, where we've had the nasty fake out to the upside, right? If it gets back above the range high where the fake out took place, that would be the first meaningful sign that the chart isn't boring, right? So for Bitcoin, that'd be back above 17.6, because if that first trap wasn't good enough, then the second one probably won't be either. And for ETH, it's probably above 1.3 similarly. Get above there and you at least have a chart that looks a bit more squeezy in the short term. But yeah, bigger picture stuff, still plenty of waiting. I agree, it's a really good point about when you have two really good arguments and they're both equally plausible, the chances that you have an edge like pretty low. When you reach those obvious in hindsight moments where like if it breaks down, it's like, oh, it was so obvious, it was just being propped up, and ETH never does. ETH, the relative strength in ETH, you expect it in a bull market, not a bear market. Every single previous cycle it has corrected more than BTC. The idea that it's held up, yada yada, you look like a genius. And then obviously if it goes up, it's like, well, look at the relative strength and all these higher lows for months, despite Bitcoin breaking down, and you're such an idiot to have ignored that, and it's a complete shift in behavior. Like, both of those actually make sense. Like, the Steelman argument for either side is really compelling, and the issue is they're more or less equally compelling from the available evidence we have in the market, right? As you said, if the 1.2K breaks down, then your relative strength argument basically disappears. And the other way around as well, where if it really starts to break out and look strong, and it goes from absence of similar weakness to like real relative strength, then you sort of get a skew towards one argument more, towards one argument and not the other. But at the moment, I think it's basically pure coin toss territory. And if you're not forced to trade it, then why subject yourself to that? On the altcoin front, there are kind of two I want to talk about. The first is Solana, because we saw some very heavy selling over the Christmas period, actually. Looks like someone really wanted to get rid of their exposure or was forced to do so. There's some speculation that, these are fund-related redemptions. Saw somewhere floating around that Multicoin is down like fucking 90% for the year or something.
Yeah.
All this type of stuff, and we just know that the SBF empire was closely entangled with the Solana ecosystem, and that's putting it generously. And so the implosion of that obviously has a negative downstream effect. The funny point, I guess it's not funny for everyone, but I found it humorous, is that we're talking about technical levels on this, and I made a cope argument that there's a single red candle at $15, and we wrote about this in Technical Roundup as well. 14.5, $15. That single red weekly candle, that's a relevant technical structure. I'm sorry, Don. Look at that on the weekly time frame. Like, what more can you ask for, right? Like, that's really fucking good. And I think it does speak to the point that when the market just fucking breaks, then what would ordinarily be substandard or not interesting levels, when it's the only game in town, you kind of have to trade them, or at least you shouldn't be surprised if the market uses some sort of anchor in the absence of good anchors, as far as technicals go, or whatever else. But yeah, this doesn't look too great. And obviously it's also tied up in all the bankruptcy proceedings because, as I said, the empire collapsed, all this type of stuff. Are you interested in buying Sol at any point? I mean, I am, to be honest with you.
Yeah, I feel the same way.
Yeah. I mean, look, if we can fucking pump way worse coins in a bull market, which don't have any type of development, that have been ghost chains for ages, then, as long as the builders don't go anywhere, and, if it can manage to shake off and rebrand to some extent away from being an SBF playground into just a competitive layer one with a different consensus mechanism, I think there might be something there, even purely from a trade point of view. And look, even if it doesn't go to new all-time highs, or even if it underperforms the rest of the market, whatever, at this point, even like decent mean reversions or some sort of bearish retest would be enormous moves. And another part of my thinking is that I'm quite a fan of bull market unit size bias for these things. And when it's in the single digits, and granted that's an enormous range from like $9 to $1, but broadly speaking, from a unit size bias point of view, I think single digit Sol, especially something that performed, yes, on the back of crazy fraud, etc., but like a household name as far as this layer one that's different. You start to put those factors together. I'd be very surprised if there wasn't some trade of some form available there. So I'm interested. I don't have anything yet. I haven't thought about it too deeply in terms of levels or whatever else. Most likely, if it just like turbo pukes towards the meme levels, like $5, $4, $3, that might be worth scooping up, because the numbers become silly at that stage. And I know the FDV and the the VC profit points, all of those are still very painful. But at a certain point, like, you just have to fucking ignore all of that. And so that's pretty interesting to me. I think I had another point, but it just completely fucking escapes me. But yeah. Sol, single digit. I like a good comeback story, Don. Even if it's not like a comeback story to new all-time high, I don't think it's a Luna situation, I guess is what I'm trying to say.
I don't think it's a Luna situation either. Like, I want to start this off, and I'm totally on board with you, but I want to start this off with like a point against what we're trying to do, which is basically Solana still place 17 on the market cap list.
Yes.
It's still higher than, it's more valuable than Link after having gone like down like a shitload. It's still more valuable than Atom, like on the market cap placings anyway. It's still quite high up there, right? This is the only reason why I didn't buy yesterday. I was actually like looking at it low time frame, and we should have actually bought because it bounced big time on the low time frames.
Vitalik, did you see that? That was the catalyst.
Oh yeah, I
Yeah,
didn't see it.
Vitalik put
No.
out a tweet saying, I've heard from people that, I hope Sol can shake off its whatever shitty connotations and associations, and there are builders there, etc." So Vitalik just sent like a good luck guys tweet, and the market just completely tore some low time frame faces off, which is
Yeah,
hilarious.
people have been like degen shorting it. I actually like it a lot at 420, which is kind of funny. But like
Nice.
there's a weekly level at like 4.42, just the highest close of basically the before the pullback up. That level I like a lot. If we could get there, I'm gonna buy most definitely. But I honestly think there's a chance that we don't get there. And this is a structure that I usually like to buy. As in like the current weekly look is one where you have like a complete, like the market completely disappears and you get a little bit of buying and another like secondary kind of capitulation event. I usually like to buy these, and I could see like a move from 10 to like 16 happen anytime soon, which is a massive like trade, right? It's not necessarily turning anything around, but I could see like something there. It's just I don't have any structure, right? Because this is in the middle of nowhere, based on the weekly time frame. We had structure at 14, which turned this thing around back down, like this tiny green candle got completely obliterated.
No, it's amazing.
But like I want to be buying this, and I think Solana is actually like gonna be a really good trade, and might even be like a really good swing trade for next cycle. I think it's gonna surprise people. It's just a question of how low does it go before, because there's a meme level at $3, basically like sell me all the soul that you
And then
what
go
was
to
the tweet?
jail. Yeah.
Yes, sell me all the soul you want and then go fuck off. And then I mean that's like a good meme level. $4.20, really good meme level. Anything there, I think would be really, really good. Not entirely sure if we're gonna get it, honestly. Like I was very, very close to buying it yesterday.
Same actually. You know why I wanted to buy it yesterday and I didn't?
Mhm.
I had a level, and this is max cope, but open up the 3-day time frame.
Oh Jesus Christ, you're pulling stuff out, yeah?
Mate, this is bad. This is like
Oh,
this
I
is like
like it.
yeah, I'm telling you. Yeah, so I mean, I'm sorry if a single barely visible weekly candle can halve this thing. Than a 3-day little cluster. I mean, this is a ridiculous exercise we're doing right now. To be clear, right? Like we're very self-aware of how absurd this is. But if you wanted some copium, Don, there's a 3-day little cluster sandwiched between the 14K consolidation and the $4 consolidation. So there's something. But yeah, I mean, look, I agree. It's important that you started with the counter arguments, and those are pretty straightforward. That it's still up mega from where the VCs bought it. There's still a bunch of it, I'm sure, tied up in bankruptcy. There's all sorts of
Yes.
fund redemption stuff. If the market as a whole continues to puke, this thing will just continue to underperform because there's just so much supply and so much relative weakness. All of those things are completely valid. And also, I think the broader point that there's a very high likelihood that whatever next cycle's bull market narratives are, those fresh coins will outperform Sol on a kind of cyclical basis. So it's not like you're going to buy Solana and you're going to outperform all the new stuff, all the shiny stuff. That seems very unlikely. But purely from like a trade point of view, if you believe that the chain isn't going to zero and if you believe in some sort of comeback story, then I think at the very least, bloody keep it on your watch list. We pumped EOS in the bull market, we pumped Cardano, we pumped all sorts of stuff. So yeah, I mean, Solana, all things considered, I haven't written it off at the very least,
No,
but
me neither.
haven't punted yet either. I saw in your stream yesterday that you were doing some more Litecoin analysis. I actually really like the argument you made, which essentially people are tagging you and saying, lol, don't about LTC, what about this, what about that? First of all, at least 80% of those are my socket accounts, or sock puppet accounts, and my alts, so, don't take that too seriously. But I feel you made a really good point about timeframes, where you basically, if you're looking at the monthly and the weekly, you had a breakout candle, and now you have a pullback candle. And if this were on any other time frame, you wouldn't get anywhere near as much sort of criticism or questions or concerns. But given how sort of hyper-focused people are on lower time frame rotations or that type of stuff, it seems more reasonable to criticize the lack of movement, even though it's sort of time frame bias playing in, which I thought was compelling. So what do you think of Litecoin in general? I saw that you said you traded around your entry a little bit to bring it down and make it slightly nicer. Is there anything structurally that's got you raising an eyebrow or thinking, "Oh, this kind of shouldn't look like that," or whatever else? Or is it the same thing essentially that we discussed last time, which is the chart itself looks good, it's fine, it's good enough, and it kind of depends on the broader market, and the rest is whatever.
Yeah, I mean, if you look at Litecoin USD, right? Let's start off with the USD chart. We had like, and this is the range that I've been discussing, right? The range from 47 to 63, almost 64, right? That's coming from like all the way to the left, 17th of August 2020. And we retested that, right? We kind of had like a really, really, really shitty week for all altcoins, right? I mean, you can scroll through the list, but like a bunch of altcoins are basically down 20, 30%. In like 3 or 4 weeks, and like that 1 week basically where you can see like quite the pullback on LTC USDs, both Bitcoin taking a shit and altcoins going down. But all it did so far, right, is just retesting the range, which I will admit I don't like. I hate when like ranges get retested after breaking out of them. It's not my favorite kind of setup. I usually, like, when I'm not in a position, I usually just don't even want to buy necessarily the retest. But given I am in a position, it retested. It's okay. Like, I can still hold it. I could close this position just based on the fact that I don't like that it's retesting, but it's not necessarily like, it's just kind of like a weird thing to do, right? You like technically the level held, so you don't necessarily need to close it. But that's like one thing. It's like it's not really invalidated anything on the USD pair yet. Just been kind of retesting stuff. And honestly, I want to see a little bit of strength going into the weekend on this thing. Yeah, very unlikely, but I would like it to kind of close above the 7th of November, kind of high, or like before it kind of started nuking. That start looking much, much better if we can kind of hold that 68-ish level. So far, I mean, today's been a good day. I'm just kind of chilling on that front. Like, the USD pair looks much, much more on edge than the Litecoin Bitcoin pair, right? And this is why I wanted to start off of it, because this is a little bit shaky, right? We're pretty close to coming back into the range. That would not be a good look. Like, that's like a little bit of a shaky one to kind of argue for. It's still bullish, still clearly bullish, given it's been holding the range, but it's not like, okay, this is not the most bullish thing you've ever seen, right? And you go to the Litecoin Bitcoin chart and you zoom out on the monthly, and you're like, okay, this is just stupidly bullish, right? This is what you want to. This is the one setup that I like the best in all of crypto trading, right? You basically have a range, you lose it, you reclaim it with a strong candle. You kind of have to be bullish on this, right? So it's a tough one, because Bitcoin's been weak, and Bitcoin's been weak for quite a while. And that's kind of dragging Litecoin down, which makes the USD pair a little bit of a shaky one. But the Bitcoin pair is still really, really bullish. So we kind of have this problematic situation where I might have to close my trade given the USD pair invalidates me. If it goes any lower, which it's not guaranteed, obviously. I'm still in it. I'm still hopeful. But I might get invalidated by the USD pair while the Bitcoin pair just gigamoons, which would be a little bit unfortunate. I hate those kind of situations. But right now, the USD pair held the range high. That's a good thing. It's not the best, but it's a good thing. And the Bitcoin pair still looks amazing. So you still have both pairs on the bullish side of things. But obviously, yeah, I would prefer a little bit more strength. So we'll see. We'll see how this weekend goes. We'll see how next week goes. I'm curious how the weekly is gonna close, and then we'll go from there. But right now, I'm not too worried. But I obviously don't like the development of the last 2-3 weeks. I'm not really the biggest fan.
Yeah, honestly, I would have lost my mind about 10 times holding for that long, like in this
Mhm.
environment. And given at its core, it's some form of a breakout trade, right?
Yes.
It's like a breakout trade, and then 3 weeks later you're like trading around your entry. It's like, wait, that's a very difficult thing to reconcile.
Yes.
But I mean, you have the luxury of a good entry and made it better. So like, whatever, YOLO, you know. Great trading advice. You're saying like, I hope, and I'm like, whatever, YOLO. Like, completely lost it an hour in, which is great. Legacy stuff. We'll go over this quickly so we can cover just a few news things and not make this too long. Although some New Year's listening for audience, maybe, given we skipped a couple of episodes. Nonetheless, in Legacy World, S&P 500, I mean, is just coming into the monthly structure that we talked about. And I think we don't need to spend too long on this. Either this holds or we're fucked, basically.
Agreed.
That's about as clear as it gets. It looks like we might close the month without testing the level, like on a wick basis, at least on the exchange that I've got. So it's quite plausible that we close, like, let's say somewhere around here, and then next month it pukes on the open below previous month's low, and then you get the actual test of support in January, which will then determine whether this is going to bounce again or whether we're fucked. But I think, yeah, it doesn't really change the broader overarching point that 37.10 to 37.60 is monthly support. If that doesn't hold, I don't think the low of the deviation will hold at 34.80 or whatever, 34.90. And it looks like we're going to probably do a deeper push into the post-COVID cluster at 3,500s, 33 to 35. The COVID high comes in at like 3,300 or thereabouts. If this monthly support doesn't hold, that's like a very strong trend continuation signal, given we're coming off the back of a lower high as well. And so you have lower high, break of monthly support. I mean, that's just bearish, you know? Like, there's probably no need to overcomplicate that. And the first trouble area is probably obviously the low made by the market so far. But then it's, you know, if you're assuming trend continuation, you're looking at the COVID highs at that point. So all hands on deck and all eyes on, you know, 3,700 basically, because there's nothing else to work with, Don.
Yeah, I mean, if this S&P situation was a little bit different, I'd be more nervous in the Litecoin position. But given we're reaching S&P support, it's just easier to hold. Even if it goes wrong, it's like you have a law on your side, right? You have the S&P being at support, you have Litecoin USD being around support, you have Litecoin Bitcoin just being absolutely Chad. Like that makes it easier, but obviously still not super comfy. But yeah, I agree with you completely. If we lose this monthly level on the S&P, it just kind of starts looking like it's cooked.
Yeah, it looks really bad.
I think it's going to hold for like at least a month. Like I could see the exact thing happen that you just said. Basically, we close, we test the level next month, and then we get, like, if it's bearish, I think we could get like a small green candle next month that gets completely nuked the month after. And if it's bullish, we just get like a massive green candle next month. But I think in general, like next month should be cooling down a little, but I could be completely wrong on that. Like if it smashes through support next month, starts looking really, really bad. And then I don't actually like a lot of the supports below us. Besides there's like a monthly level around 3.2.
Yeah.
Basically the COVID highs, like the pre-COVID highs, that I find like somewhat interesting. But even that is, I'm not the biggest fan because it's too close to the lows, the previous ones that we've set in October. So like it's a little bit of a scary situation if we start losing this monthly level.
Yep. I mean, at least it makes the analysis clear, right? Hold or go home.
Yeah.
So that sort of saves us that much. And obviously the FUD timeframes are stuff like the quarterly, right? Where if you're looking at for candle structure, at best it's at 3,200, and then, you know, God help us for the others. In terms of the macro stuff that hasn't been constructive for risk is that the dollar has had like its worst quarter ever, basically. It's just like a turbo nuke candle. And risk is still like on the ropes. And this thing is coming off the back of like a mega breakout and a mega uptrend. It's been down only for a quarter, and we're like on our last legs in terms of support for risk assets, which is like a very rough combo, because it would suggest that even if the dollar sneezes to the upside, or even if it bounces and makes a lower high, or just like anything other than down only in dollar, like if dollar weakness has led to barely any upside in risk assets, then what would dollar strength do? And I don't think there's a positive answer to that question,
Nope.
at least from what's available. For me, the dollar levels are like 102, 103-ish. It's getting, like, on the monthly, it's just a pre-break, like the Solana style single red candle. And we know that level is good for something, right? But I mean, I'm obviously being facetious because it comes on the back of, if you look to the left, it's like a big breakout area nonetheless. But anyway, 101 to 103. Dollar index doesn't need to make a new high. I mean, that would just crush the world, it feels like, at this point. But even just like a bounce in dollar would be unwelcome, I think, for our bags. So that's one to watch out for. And on the same, the other side of that coin is the euro mega retest of sort of 106, which is kind of reaching the apex of that, or the pinnacle of that level. The extreme.
Oh yeah. And it's gonna close nice, like it's gonna close somewhat nicely too, I think.
Yeah, it looks like it. So yeah, like the risk assets themselves, I mean, the indices just have clear levels, which is nice. But unfortunately, currencies also have clear levels, and then they're conflicting quite strongly, unsurprisingly, I guess. But it's sort of inflection point season. You and I spoke about this casually, but dude, some of these legacy names just look completely fucking awful. Like, just so bad. So at the very least, the whole argument of, crypto's too volatile and goes down too much, so I don't trade it. It's like, yeah, but you trade like Apple, Amazon, Arc, Meta, Tesla, all this other stuff, and how's that going, Chief? Like Apple looks appalling. A lot of these things look like they're coming off year plus ranges, breaking down, well, to the downside. Apple, Amazon spiked its COVID low. That's just a very weird thing to say out loud. Imagine if Bitcoin did the same thing. I mean, I'm joking, obviously, but like, Christ, that statistic is like quite scary. Arc just looks like, I don't even know how to describe this. It's like a Wall Street cheat sheet on steroids or something. It just looks like an utter disaster. I don't know where this thing is going. I don't know where Cathie Wood is going or what she's thinking. This thing is appalling. And unsurprisingly, it was one of those just mass tech deflation, super uber growth ETF that a bunch of retail and fund managers, but also a ton of retail, piled into. And you can kind of see the resolution of that now when growth and tech get hammered. Meta, we discussed. I mean, Tesla, I don't know what's going on there. I mean, nothing good if you believe in efficient markets hypothesis, looking at this chart. But I mean, that's down a shitload from the highs. I mean, it went that's down like crypto levels of 70 to 75%. And I'm not sure, in terms of technicals, whether it's worth even paying a ton of attention at the moment, because my eye is drawn towards the monthly cluster, but we're below that, and it looks like we're going to close below it as well. That sort of 120 to 160-ish being generous, and that's not great, because if you're looking for candle structure, you're left at, I mean, I don't even want to say the prices out loud because it's really bad. But in any case, the technicals there don't look particularly good either. So,
on Tesla, honestly, I could see it retest 160 next month, because a bunch of people are just kind of completely going ape and shorting it when it's down like 75%. But I still think it's super bearish afterwards. Like I've been shit talking Tesla for so long now, but I mean, I think it's basically like Elon Musk is starting to piss people off.
Right.
And he's like, this is the typical kind of hero turned villain story where people love him and then they turn from loving him to hating him. Like a bunch of people still love him, obviously, but I think it's much, much less so than back in the day. And he's just very public with it too. So it's like people bought Tesla because they like Elon and think like that he knows what the fuck he's doing. And the less people believe that he knows what he's doing, the worse it is for stock price, I think. So like if it bounces, it feels like a social token. It's kind of wild. And I think this is going to be becoming more and more a thing, where you don't necessarily like invest in companies and stuff. You invest in people. It just seems like this is where the world is headed. It's the same with Facebook, like Meta, like all of like people are looking for like the central figure that they can either trust or that they think will make them money, rather than like just a faceless corporation, which is on one hand good, and the other it just leads to stupid evaluations, like in Tesla's case, in my opinion anyway. Like 400 seemed completely crazy to me. Even 122, like compared to a lot of other things, seems crazy high. But it's just basically because people love Elon. But I think that's turning a little bit. So I think like next month, maybe we have a good month. If it goes to 160, that seems like a good kind of area to like whatever. Like if you buy into this breakdown and then you want to like sell at least into 160. But I don't think it goes much further than 160, and I'm not even sure if it's gonna get there. But that's kind of like the level that I'm looking at.
Yeah, for a lot of people investing, I mean, I thought this was a crypto phenomenon, but you're right, it's spilled over into legacy, where it's just a cult of personality, basically,
Yeah.
at that point, where you're kind of unable to make any independent assessments and put your full faith into one person who will just like fix everything. And we see that in crypto with devs and teams and influencers or whatever else. So, not my favorite thing in the world, as you can imagine.
No.
Let's coast very quickly through some of these headlines. They're not super long, and I'm cognizant of the time. So if you've made it this far in the video, I mean, thank you for listening to us. And leave a like, leave a comment, you know, do all the YouTube stuff, and you know, we'll try to keep this going. I mean, we will. Not that we've anything better to do. I mean, I know you've got like a girlfriend, child, etc., but crypto rules the world, right? And this is much more important than your real life relationships talking to me on a Friday.
Well, yeah, obviously.
Obviously, no contest. The first is from Reuters, and they say FTX customers ask bankruptcy court to keep their names secret. Because a lot of the time you just get a list of creditors as part of standard Chapter 11 stuff, and they fucked it up and did it for Celsius as well, as in didn't keep it secret, and that led to a ton of fraud and specific phishing and doxing attempts. And you can connect, like if you can connect a single wallet, if you're good enough with on-chain stuff and someone's OPSEC isn't quite up to par, you can find out a ton about someone, basically dox them, and therefore create very sort of targeted attacks to steal their money. We sort of touched on this before. I don't think this has been ruled on quite yet, but I really hope that the names are kept secret, because crypto carries a very specific type of risk when it comes to like identity, and I just don't see. I mean, yeah, maybe for like funds or corporations or whatever, those types of entities, you can find some sort of carve out to identify them if need be. But for individual customers, I think if you know what crypto is, this is kind of a non-starter and would be a disaster. And I think Celsius doing it set a very bad precedent. You know, within a day, you just had a website where you could search anyone's name and how much they lost in Celsius, and then people finding their wallets and looking for transfers. It's a complete mess. And I think totally, it's a case of applying archaic disclosure standards to a tech where they just only work negatively for the creditors themselves. So I really hope this doesn't happen.
I do agree. I mean, it'd be horrendous. It's kind of like, the thing is, if you're your own bank, right, and something that we've talked about before, you obviously carry a lot more risk than if someone else does it for you. Because one, you're not insured for your crypto stuff. So if someone comes to your house and steals it from you, you're probably not going to get it back. And two, someone is going to come to your house. Like, I'd much rather have someone come to like a bank than to my house, honestly, to like when they're kind of robbing someone. So you don't want to have this kind of you obviously don't want to have this stuff public, right? Because then like you're at much more risk than you would otherwise be, and it's completely unnecessary. Especially with something like crypto. So,
and in this market, no less.
Oh yeah, but right now there's nothing to steal everyone's poo anyway.
Also, the funny thing is, I mentioned in this article indirectly, because 2 years ago, Dorsey let the customer list of crypto lender Cred remain secret to preserve Cred's ability to market and sell that list as part of a possible sale of the company. That's the funny thing, right? There was a big lending firm called Cred which blew up. So now when I blow up, inevitably it won't make big news because there was a lender called Cred which became insolvent. Maybe I need to change my name. There's some sort of like nominative determinism going on where, because I'm also called Cred, therefore I will go publicly insolvent and blow up. But yeah, for the sake of our industry, no more news like this, etc., etc. FTX owned Liquid announces plan to return customer funds. Again, this is kind of the FTX Japan entity, and they had much stricter crypto regulation as far as segregating client funds, and as a result, they're going to get their money back. So people making look, again, we've basically lost all meaningful political capital to argue against stricter or even existing regulations, because the only entities that actually ended up surviving and having money to give back to their customers were those which were most tightly regulated. So there's like a very high correlation between how regulated you were, high positive correlation between the degree to which you were regulated and the likelihood that you get anything back from FTX. So this is, I think that's a tough one. And so a lot of these entities in Japan, etc., I think Australia, although I might be wrong, they're going to get their money back because the requirements were there and they were strict. So yeah, as far as the regulatory stuff goes, I mean, we have no arguments left to make. And as I've said before, I don't find the argument that, FTX wasn't crypto to be compelling because it had nothing to do with crypto, wasn't in line with any of the ethos, didn't have product market fit, people didn't want it, then it wouldn't have gotten so big in the first place. There's clearly a demand for centralized platforms, leverage, CeFi lenders, BlockFi, Celsius, Voyager, etc. Like these things wouldn't get so, like it's impossible to hold that these things aren't what people want, yet at the same time them becoming so big in the first place with customer funds and so on and so forth. So yeah, that's the regulatory stuff. This for me was hilarious. Government-backed group to set up NFT marketplace in China with secondary trading. It will be built on a blockchain called the China Cultural Protection Chain. Have you ever heard of anything more bullish? It's like selling is illegal. Your WeChat, we fry your phone if you sell the state NFTs. So I'm so bullish the China Cultural Protection Chain. That's like the layer 1 trade is back, baby, and it's more centralized than ever. So that's really good.
How do I invest? Oh, God.
The project includes 2 government-backed institutions, China Technology Exchange, an institution jointly established by state bodies including the Ministry of Science and Technology and the Chinese Academy of Sciences, and the China Cultural Relics Exchange Center, an institution under the State Administration of Cultural Heritage. That's so bullish.
That is quite crazy. Honestly, something I want to say is I'm incredibly, and this sounds stupid coming from me, but I'm incredibly bullish NFTs in general. Not necessarily the ones that we have right now in general, like the ones that have been trading, but I think you have to follow this space. Like it's the one thing I think in crypto that you definitely have to follow. Seems very, very attractive to like not only just like people that want to gamble, but also like big brands and like in general. It's a space that makes a lot of sense to me. Not necessarily how it's done now, but I think it's going to be an interesting one. And stuff like this just proves it. Obviously, it's a little bit of a choke thing, not to them, but to us. But yeah, I think this is one of the spaces that's going to get, if we go back into bull market, it's going to be one of the wildest ones again.
For sure.
Last cycle's been, and I mean, just objectively, the NFT people have made out the best, at least the ones that entered early enough. I think that's very likely to happen again next cycle, which I hate because I'm garbage at trading them, but it is what it is.
Yeah, I'm a boomer as well. I need to get better. And the thing is, you'd be an idiot to ignore the most effective and efficient moat we've had for crypto ever, right?
Yes.
Especially as far as like retail entrance and speculation goes, like nothing comes close to NFTs. And so if you ignore that trend, I think you're in trouble, and you'll end up one of those Bittrex altcoin, Bitcoin pair, boomer, maxi, whatever. So if you care about speculation, you have to care about NFTs. The one thing I'm undecided on is how financialized NFTs should be, because at the moment I think one of their incumbent edges is that they're available and accessible to people who don't care that much about like finance and speculation, derivatives and structured products, etc. We're seeing now that the classic Ponzi crypto casino mentality is also being applied to NFTs, not only from the trading point of view, but also from like using them as collateral and basically classic sort of perpetual swap type speculation on them. And yeah, so basically the usual thing, if we take something and then find a way to add leverage to it, is being added to NFTs. You have like market making firms and more liquid ways to speculate. I'm basically still undecided as to whether that's a net positive or net benefit. I feel like it's an inevitability, because when people see that they can make money on like OpenSea or whatever, they're going to want to speculate more, and then so those products get sort of financialized through the back door. But I think that I don't know, philosophically, I do just enjoy the idea of this being one of the more simple products, not for like pure leverage speculation. And there's like an angle to, yeah, I mean, you trade it and buy and sell it to make money. I mean, it's crypto, it's speculation. It's kind of the only thing we've been able to come up with aside from stable coins. But I think there might be something as far as keeping it an efficient moat to keeping it leverage free or non-financialized as far as reasonably possible. But my thoughts on that aren't terribly well developed.
Yeah, I think it'd be nice, but I don't think that's possible.
Yeah,
It's basically like this thing. I think NFTs are gonna be trading great until they're basically adopted more, and then they're gonna trade like shit. That's just how it's gonna be. Which leaves some room, because I don't really think NFTs, like the trading side of NFTs, I mean, just looking at the fees that you have on OpenSea and on all these platforms, it's a fucking joke, right? I think if the OpenSea fees in general, like the platforms, I mean, OpenSea is just the biggest one. But if they weren't so predatory, and if the artists didn't ask for so much, right? Because there's a big cut to the artists as well. And they kind of getting millions and millions left and right. If that wasn't the case, I'm not entirely sure if there would have even been a bear market for NFTs, or if it would have just been like, okay, volume's going down a little, prices dip a little, but they keep going crazy, basically. As it stands right now, it's just when people are not really trading anything or crypto in general, the fees are too high to kind of make it interesting. But if that kind of gets fixed along the line, and that's gonna be, I think, just based on the fact that you're gonna, like, a lot of projects are gonna see the money that OpenSea makes, that other competitors make, and they're just gonna be like, okay, we want in, basically, and then it's gonna get better, and it's gonna be a really interesting space to trade, I think.
yeah.
So
Especially, look, if you have a product which is liquid and you don't have to compete against like HFT firms because they have size constraints and tech constraints and whatever else, the likelihood that you have an edge despite the fees is still pretty high compared to trying to outtrade them on like Bitcoin perpetual swaps on the 1 minute, you know?
yep.
So you should definitely go on the risk, like on the risk curve, especially if you have a smaller account, you want to go where the big guys can't go, you know? So that used to be just casino shitcoins, low caps, etc. I think NFTs definitely fill that role and will continue to some extent. At the very least, I don't think they're going anywhere. They were far too effective, far too fun, attracted way too many people into the space, and yeah, I don't think it's like a single cycle fad. I just closed the tab for the next article I had, but it was about the 3 commas API leak. This is just one of those another stupid cases where the CEOs just seemingly, allegedly, apparently in Minecraft, in my honest subjective opinion, just chatting shit, saying like, oh, it's FUD and people don't understand this and it's not coming from our side and you should like talk to the police about your API keys and all this type of stuff. And now that the database has been leaked, it's pretty clear that it came from, the evidence appears to suggest it came from that it might have come from the 3 commas side, despite assurances otherwise. So just like last episode, you know, if a fucking CEO is saying something in crypto nowadays, just assume the opposite is true and you'll land somewhere closer to the truth, which is depressing. But yeah, it's also just classic bear market stuff, right? Just like infinite hacks, exploits, lies, no trust. But the thing is, the 3 commas stuff, dude, that's we started getting like reports of some suspicious trading like months ago, it feels like, some early instances. And so if you still had your API keys on there after these high profile incidents, I don't know what the fuck you're doing, man. I think in general, in this type of environment, you should try to keep your counterparty risk to an absolute minimum. Because like everyone's poor, no one's trustworthy, and everyone's desperate, and that's just not a good environment to trust people in general.
The thing is, right, if you're a little bit lax on the security side of things during a bull market, there's actually a good chance that you're going to get reimbursed, because these kind of companies can just raise money. They make it whole because they don't want to lose kind of what they've built. And that's something that we've seen last bull market, right? A hack happens, people are immediately like, they get the money, they're like, okay, everyone's just gonna get reimbursed, it's okay.
People forget about it. Yeah, it's like Binance, BlockFi. I think from memory, Binance, BlockFi. You know, I think the Seifu fund happened after a hack, right, or something like that. Anyway, so yeah.
And then during the bear market, you're on your own, right? They're gonna be like, "Oh, fuck you, we cannot afford this," and so the risk is much higher, right? Because the chances of it getting kind of hacked or getting that something goes wrong is relatively similar, I think, during the bull and bear market. But the chances of you getting your money back is almost none in the bear market. But in the bull market, there's actually quite a good chance. So, like, even if you just look at it from that perspective, you want to have as little risk on the counterparty side as possible during bear market, just because you're not going to get your money back, which is a shitty thing, and it's really sad. But that's just kind of how it goes, because if they don't have any money to give you and no one will give them money to kind of save their reputation and keep their business going, I mean, where's the money going to come from, right? And it's just...
You are the yield, yeah.
Yep.
Yeah, it's just you get doubly fucked because your counterparties are just less trustworthy and probably less able to reimburse you or whatever else. But also at the same time, your edge in the market is probably lower as well. So there isn't that need for available capital, or the demand for capital efficiency in itself is reduced at the same time.
Yep.
So as we talked about last episode, it's like you have to make that calculation. If I'm going to incur counterparty risk, what's the expected upside from doing so? And if it's not clear, then the counterparty risk itself probably isn't justified. I've just closed the tab again because I'm an idiot, but this is about the Mango Markets hacker, exploiter, or coder, depending on your what you view of the incident. He got arrested, and there was like there's an FBI special agent investigating and stuff. Yeah. So I mean, I think a general rule of thumb, and I read this somewhere else, but it just makes sense. If what you're doing in crypto is likely market manipulation or illegal in legacy world, don't do it in crypto. And I think if you follow that, you'll probably end up in a pretty good spot. Now, he has very odd legal views from reading his Twitter and whatever else. And he also, funnily enough, it went all the way to the Supreme Court, I think. I don't know if it was the Supreme Court of the United States or just the one for his state. But he sued the state of New York after he like tripped and fell on some snow. And then, yeah, he's like one of those. So he basically, he's one of the, those YouTube clips that you see of American sovereign citizens, those really cringe ones, where it's like, hey, what's your name? I don't need to tell you my birth name, the Constitution. I'm a free traveler. It's like, oh, fuck me, like those types of videos. He comes across a bit of as that type of archetype. But
dude, if you sue someone for tripping, I mean, I'd be too embarrassed to even show myself. But it's like you trip, it's embarrassing, and you're like, okay, I'm gonna make this thing into a bigger thing than it even is. I'm just gonna sue the government. It seems so stupid to me. What the fuck?
It's a very American thing. It feels like, but basically, you don't hear that as much in Europe, from my anecdotal understanding. But yeah, I mean, look, if what you're going to do is going to break laws in legacy world, then in crypto world, he was very nonchalant about the whole thing. Like, I'm just using the code as it was intended, etc. The premise of code is law has never made sense to me. I think, as far as I'm aware, law is law and code is code. You can't just say code is law and then break the law, and because you used code to do it, it's somehow a different category. I don't know exactly what the reasoning is. Again, it goes into this whole legal philosophy branch, which of course is more nuanced than I've given it credit to. But again, we're not exactly in a position to curry much favor with the regulators at this point. And look, if you want to be the sacrificial lamb that goes and fights this and argues that code is law and you did everything in line with the protocol and used it as it was intended, if you want to be that martyr, great. I don't think it'll set a useful precedent either way, apart from stating the obvious that doing illegal stuff that's in legacy world, just the fact that it's crypto won't save you. But it's probably just not a particularly smart thing to do. And also, he did some really dumb shit in the process. I read the filing. He had one of his accounts was like KYC'd under a Ukrainian woman, and so that's basically what, identity fraud at that point. Maybe other charges as well. So yeah, you're not doing yourself any favors. I read some people argue that it might have interesting implications as far as MEV goes. So, I mean, is that a form of market manipulation? These sandwich attacks and front-running big orders. So maybe there are some downstream implications. But, like, I'm not going to make it more complicated than it has to be. Just don't do illegal shit. And if you have to sit there and ask, is this illegal? Then maybe wait a bit longer. Don, the final bit I've got, and this might be the last. Well, this is the last piece of news, but it's also the longest episode we had thus far of Casual Friday, as far as I'm aware. So if you've listened to us this whole time, thank you. Hope you enjoyed this little Christmas present and sort of sending off the new year. We won't put you through the whole what do you think is going to happen next year. You might as well do that next Friday, given how long this is already. But this is from CoinDesk, and it says, First Mover Asia, 3 crypto predictions for 2023 from digital asset manager 3IQs, which is an unfortunate name, research head. And I was interested in reading this, and I don't know this person. I'm sure they have good thoughts and some thoughts which I disagree with, whatever. But this just came across as the most generic type of TradFi boomer view of crypto that I've read in some time. And I'm interested in if you agree. Maybe I'm just a cynical asshole, but this is kind of these are the arguments made. So the article kind of goes over some stats, and then for the insight section, CoinDesk, it's like an interview format. So, CoinDesk, what's your first prediction for 2023? And the gentleman answered, leadership will come from the corporate side, not the regulatory side. We're looking for regulatory clarity so that investment firms can own coins and invest in existing layer ones, whether it be Bitcoin, which wasn't capitalized for some reason, Ethereum or layer ones. We believe the incentive structures of companies will make them take a leadership role and act and not wait for legislation to both continue to create their own industry blockchains. Fucking huge alarms whenever dude, industry blockchains, like, I'm sorry for the readers who might not be aware, like in 2017, 2018, around the ICO era and the first kind of retail bubble, like one of the most pushed and least successful areas of like crypto project funding was this idea of industry blockchains, or what's the other word it was used? Not industry blockchains, enterprise. There we go, enterprise blockchains.
Yes.
And so basically you'd have like specialized blockchains for like banks and big corporations to use or whatever else. And it was the shittest narrative ever, just a complete money black hole, which didn't lead anywhere. So that immediately raised my eyebrow. And then it says, as well as leverage the existing Ethereum EVM, and to a lesser degree the Bitcoin blockchain, as they transfer both B2B and B2C functionality to blockchains. Again, the fucking business side. And then that was the most silent, underreported action in 2022. And TradFi is going to lead the charge, not crypto native and not regulatory agencies. That's going to be the curveball. And I was like, this is... I mean, there's space for reasonable disagreement, but I don't know what you think about this, and this is me going off the cuff because the episode is way too long at this point. But at a certain point, when all these fucking VC suits were making a ton of money on their seed projects in the bull market, I was like, well, maybe they're smart. And then I'd read what they'd actually write about crypto market cycles, that Bitcoin and ETH don't matter, these tokens are underperforming, there will be no bear market, if there will be, it will be like sectoral and not like secular, and it'll be like cyclical, etc. And I just found myself at this impasse where these people are supposed to be smart, and I'm not qualified or educated or anything like that, but I've got enough experience, and I just found myself disagreeing with like every single fucking thing they said. And to me, if anyone else had said it, it betrayed like a lack of understanding in super basic crypto market structure. And so I had this tug of war in my head where it's like, these guys are supposed to be smart, they're making money, but like when I hear them speak or write, I'm like, this is someone who's just like, they don't get it. For lack of a better term.
They don't get it.
They don't fucking get it. And so I was reading this, and I'm reading about like regulation doesn't matter, TradFi is going to lead the run, enterprise blockchain, B2B. I'm like, what the fuck are you talking about? You know, like it just, I don't know. What do you think of this stupid tangent I've gone off on?
I mean, the thing is, right, and this has been the case for every single cycle, that like the crypto natives have led the charge, prices have gone up, and then the VCs in the traditional kind of world has lashed on like fucking parasites, taking money out of the ecosystem left and right, and then basically gotten wrecked during the downturn, like every time. And I mean, this time is no different, right? So I think it's like just a load of bullshit in my eyes. Like it's never gonna be like the traditional world that is gonna lead the charge. And if anything, I think regulatory side is gonna influence much more than that. Basically, the VCs and the suits are gonna come back when prices are better, and that's gonna happen after crypto natives have kind of picked up the pieces, and then the VCs are gonna be back preying on the stupid and preying on the people that do not really understand what crypto is about. So, I mean, I couldn't disagree more, honestly. I mean, the VCs are going to be back, and the VCs are going to make money, right? But they're going to make money off of like people that have no idea what the fuck they're doing again, which they've done before. Honestly, like it's appalling, right? You sit there and you kind of pretend like you're something better, and then you just kind of like sell your VC coins to people that don't really understand how any finance works, right? You take advantage of them and then you kind of fuck them over. I'm not saying this gentleman did it, but that's by large what's happened. I think it's one of the biggest money drains in crypto last cycle for bullshit projects, and then they just kind of fuck off with the money they've made. It's really sad, honestly, and I couldn't disagree more with what was said. Like it's just bullshit.
Yeah.
It's never been that way. I don't think it will ever be that way. It's not what crypto is about.
Yeah, I agree. I agree completely. And if anything, I've just turned so much more cynical. I've always have been, but especially now of these fucking again, not to this gentleman specifically, but the broader point. When fucking suits just come into crypto from TradFi world and pretend they know everything and just apply all their TradFi framework to crypto, thinking it's just easy money, and then they get fucking carried out. You know, and that part is so satisfying. You fucking have to pay your dues to this space, man. It's different. It's different. And there are people who've dedicated large portions of their life to it and have watched market structure change completely over 5 years and survived more black swans than you've ever seen in Legacy and are still around to tell the story. That's worth taking seriously. But in my experience, and I'm sure yours is the same, when they come into the space, it's always this kind of snobby, not nose up approach that, oh, these are all anime, incel, basement dwelling, no finance education people, and I'm really fucking clever, and this is dumb money, and I'm gonna be amazing, and whatever. Fuck you, basically. Again, not to this gentleman. It's just the general trend of so-called sophisticated TradFi operators coming in with the presumption of knowledge that's rather hollow at its core. CoinDesk also asked, what else do you foresee for the year ahead? And the gentleman made a point about, well, first of all, he fucking spelled, look, I don't even need to make substantive arguments. He spelled Ethereum with an I.
Well,
like, I'm sorry.
It's the wrong person to ask.
I am free to dismiss, and I wouldn't ordinarily do this, but I can freely dismiss anything you fucking say if you can't spell Ethereum properly. Like, that doesn't seem to be an unreasonable leap to make. Like, why should I take your crypto views seriously if you believe in enterprise blockchain and you can't spell Ethereum? Like, you're not a fucking serious person. Anyway, I'm starting some sort of fucking turf war, but for some reason this article just really triggered me because it put together all the stuff I hate about like suits spilling over into crypto thinking they're clever, and it was all the narratives which they've fallen for in the past. So it's like a perfect storm of horse shit. And then the gentleman makes a point about NFTs where he says the NFT technology from a security and verification standpoint has greater integrity and a higher trust and security factor. Can someone who speaks English natively translate that sentence for me? Because I don't know what the fuck it means. And he spelled Ethereum again with a fucking I. It says, given it can be nested with the Ethereum ecosystem and can be bridged, it will have functionality and security. Like, how does someone get paid to write this stuff and to like do research and manage assets? You can't fucking spell ETH. You can't form a sentence that makes any sense. And you believe narratives that are like 5 years old. And when it comes to NFTs, you didn't talk about like community or speculation or that they're not non-financialized products. You don't even go into like the interesting use cases. You just say the words security and trust 2 times and hope that makes sense. And then some editor at CoinDesk actually read it and thought, yeah, you know what? Spell Ethereum with an I. I'll just publish your responses as they are.
The thing is, right? Like,
I'm tilted, dude. I'm done. Like,
oh, it's always so funny. Like, and whenever you see this, right? And this is something that we've had in crypto a lot. Like, people just try to make something that is just completely stupid sounds so complicated that no one understands, and then everyone is too afraid to look stupid, right? Everyone's like, holy shit! Like, if I'm gonna say that I'm not understanding what the fuck this person is saying, then I mean, I look stupid if I don't understand this. So I'll just be like, oh, yes. But it's like, it's so much horse shit. Like,
it's bad.
It makes zero sense. But everyone's just too afraid to speak out because they're afraid to look stupid. And then, I mean, this is just something that you saw on Twitter during the bull market too. Like, the most loaded horse shit. Like, Sailor is very good at that. Like, he just types something up, makes zero sense. People love it. But just because they don't understand it. Suzu also did this famously. Like, he just like put words together and then like complicated words that few people know. And then like, even if you Google it, you're like, what the fuck? And then if you really understand it, it's like, it makes zero sense, but it's just like, it sounds smart and that's why it must be right.
Yeah.
And
thing is, it's a trap for beginners as well, right? Because they'll go on to like crypto Twitter or whatever, and they see CryptoDonAlt, who's like a duck and posts memes, and they see like Cred, who like draws on charts or whatever, and it's like, these guys are fucking idiots. And then they'll see like some
fair
suit.
point.
Yes, true. But then they'll see some suit who's like, oh, I worked at fucking Lehman and JP Morgan, I've got MBA, this and that, and they'll be posting like future discounted cash flows, sales, and all this type of stuff. And they're like, this is someone who's got like a framework and a system, whereas they've got fucking no clue what's going on. Not that we do either, but at least we've like made enough mistakes to make sense of some stuff some of the time. And the experience is worth something, I like to think. But as long as you come across, like, I feel like we need to stop granting like inherent credibility to people who come from a legacy background. And I think that's been a problem in crypto. It's been, it was a problem in the bull market. It's been a problem since I've been around, where if someone just like comes into our playground, the fact that they came from the corporate world or the serious side, and again, not to this gentleman specifically, even though he does make some fucking awful points, but like to the broader trend, we just kind of give them a pass. Because like, hey, surely they wouldn't be able to work in these banks and institutions if they were fucking idiots. It's like, no, they would. And they have, and they will.
I mean, just look at the state of banking, right?
Yes, exactly.
But it's what it is.
Trust your anime meme avatar people who squiggle on charts, people who've been around. We're not completely worthless all the time.
Yeah.
Don, hour 43 minutes. That's plenty, I think.
Yes.
That's all I've got. Any plans for New Year? What's cooking?
I mean, I'm just gonna go to a castle with my girlfriend.
The second one you bought. You told me about that. Yeah.
Oh, yes. And then watch the fireworks, because Germans love to go fucking crazy, New Year's wise, and it was banned, I think, last year. So I think this year is going to be completely nuts. So I'm probably going to do that, go to bed early, like a proper, like I'm training for fatherhood, which means I'm taking every second of sleep that I can get. But that's basically the idea. Just going to spend it with her, with no one else, because it's been enough. Like Christmas giving me the rest, and I'm now just antisocial, hiding away in my man cave.
The mean reversion. Yeah.
Yes.
You're accumulating sleep tokens for the bear market that's going to follow.
Exactly.
That makes total sense. Yeah, I'm just gonna chill with family or whatever. I think if they'll have me. Who knows at this point. Yeah. Okay. We're gonna shut up. To our audience, hope you enjoyed 2022. I mean, that's a very difficult thing to do.
Oh, Jesus.
Nearly impossible.
Yes.
But thank you for sticking with us. Hope next year is better, but God knows. Have an excellent New Year. Hope you had a good Christmas. We'll do a yearly prediction stuff next Casual Friday. But for now, subscribe, like, do all that stuff. Stick around, because we're unemployable and can't do anything else even if we wanted to. So that's it from us. Don, cheers. And to the rest, see you next year.
Bye-bye.